This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, November 25th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets are December corn up a penny at 424 3/4. January soybeans were up 4 1/4 at 1127 1/2, and December Chicago wheat was up a penny and a half at 523 3/4. This morning we got weekly export sales. This was for the week ending 10/9 on the corn side, right in the middle of expectations there, 1,326,600. Soybeans, kind of the lower end of the range, 785,000. And on the wheat side, they were solid, 613,900. Upper end of the range was looking for a number close to 650. So it was a good solid week for wheat. Also for meal, 358,400. That was upper end of the range. And oil was 1,900. That was sort of below the bottom end of the range of estimates there. Yesterday's crop progress conditions report, 96% harvested on corn. It's against 91% last week and 97% for the 5-year average. Winter wheat ratings improved 3 percentage points in the good excellent category to 48%, still trailing last year's 55% rating at this time. Yesterday's news, positive trade news between China and the U.S. There was a good conversation between Xi and Trump, both agreeing to state visits down the road. So I think that's a positive sign. We still grind into first notice day. I know, Ben, you talked about heavy volume between the DEC-MARCH spread. That's where most of the volume lied yesterday. So maybe fill us in on some thoughts here as we kick off the morning, and then we'll throw around the room.
Yeah, tremendous amount of volume traded in DEC-MARCH. From 13 1/4. It was, if you looked at the individual volumes of each one, it was pretty light. Kind of leads me to believe that maybe the farmers rolling basis contracts. And I think that once we kind of get out of this period, I think corn will find a little resilience and, maybe gravitate back up to the mid-range of where we were trading before, maybe call it mid-40s in March. Brazilian corn is getting stronger, and I think we're doing some pretty good business. So I think this mechanical nature of the market, first notice day, quite frankly, I think it's held in pretty well, considering the amount of basis contracts that we kind of speculate were out there. So we'll see. The voices in the soybean market are pretty adamant on both sides of the line here of it's super bullish and it's not bullish at all. Kind of really sort of mid-range from the breakout right now. So we'll see how it acts. I think we want to continue to see flash sales there, keep shipping beans, and it's going to be a slow roll. It's not going to be a day where we walk in, I don't think. And there's a really big number there. Freight is hard to come by, and it's going to be a slow roll, and we'll see how it works out.
Yeah, we were talking before the show, Justin. It's it's getting less and less likely to hit that number. I mean, to be quite honest, I mean, they got to average over 400,000 the rest of the way. They got 25 days to do it, and we're not seeing daily announcements. So I don't know. It just seems like a long shot at this point.
Yeah, I selling back towards some moving averages, and I again get on a soapbox here, but commitment of traders would be really nice to know. I think the funds have flipped to to a decent long is my guess in beans, but who knows until we get there. Yeah, I kind of go back to Ben's point on you could probably convince me to be bullish or bearish beans here, with the right set of circumstances. I mean, if South America, whether it's early, right? But if it does stay kind of crummy, I think it puts us in a interesting position with how much is leaning towards Brazil on the soybean market. So I'm kind of neutral on beans, honestly. I do think that, you know, a lot of buyers did shift from US back to Brazil, you know, with their basis collapsing. So if we don't see Chinese numbers really start spiking here, Dan, you know, did we net lose business after this kind of announcement? You know, because we rallied flat price so much and got uncompetitive that rest of world went to Brazil, and China's way behind, what, 16% of the number, right, that they're supposed to do by the end of the year. So I don't know. I think the farmer is kind of waiting. I think we obviously, you know, Ben and I were talking before the show that, you know, freight's hard to come by. It's because we did a ton of business. It means the farmer did sell quite a bit off, you know, off the combine, which makes sense with the 45, 50 cent rally during harvest and good yields. So that can kind of turn bearish spreads once you kind of, it's kind of counterintuitive, but once you reach kind of max capacity for that time frame, then you can't do any more business. So I know it sounds weird, but that can kind of be bearish spreads for a period there. So yeah, I think things kind of make sense here. You know, kind of weak into first notice day, see if it finds support here after, call it, you know, after Thanksgiving. I think there's a good chance that it does, but we'll see.
Dustin, what's on your mind this morning?
Yeah, first notice day on Friday. So the last day for that is tomorrow. Rolling longs, and you know, it's a short week for that. So I imagine those get cleaned up today. Maybe some tomorrow that just automatically have to roll. Only 80 registrations right now for corn out of zone 5. So, you know, market's been pretty resilient. I think strong demand, you know, it's if we have a failed first notice day break, if it really rallies like it, I think, you know, that's something to say too. It's just that they're just not getting enough flow. We're heading into the holidays too, so your basis in the East still reflects that. But yeah, I just, like I said, I don't really have a strong opinion like Justin said either right now. It's like play to your risk situation at the moment.
So Justin, hypotheticals here, they don't hit that number. What happens on the bean side? I mean, that's going to be largely disappointing to everybody, isn't it?
Yeah, you know, I think when it first came out, you know, there's plenty of people that said there's no way we're going to hit that number. So I think there's already a decent amount of skepticism. I think if the market thought it was going to happen, we'd be higher than we are today. So I'll say that. Yeah, I just, like I said, I just think a lot of things make sense. Just kind of the action that we're having right now, this time of year, going into first notice day. And I'm a big first notice day guy. Like, see how it acts afterwards. You know, if you're bullish, you should be buying it this week. If you're gonna make a stand, like this is when you buy it. You buy half going into first notice day and half the next morning. That's the old traditional way of doing it. If you're a bull, if you believe in that, and then if it fails, it's no good. Usually, if you have a rally and then it fails, it makes new lows afterwards, and you kind of get out. But like I said, everything kind of makes sense, and I'm kind of trying to see what happens. Call it next week. Yeah, we act.
Very good. We'll we'll move over to livestock, Ryland. Yesterday, looking at synthetics, I guess on the close, it looked like a couple dollars lower in live cattle and about $4 lower in feeders. So we'll have to see what happens here on the open here. But and then also huge kill numbers in hogs. So what are your thoughts after yesterday's bloodbath?
Yeah, definitely a bloodbath. I mean, I think the market it reacted exactly how everyone was thinking, you know, over the weekend. I mean, obviously the cattle on feed report got completely overshadowed, and you've got a really emotionally charged market right now. I mean, we're coming down from record all-time highs, and it's happening really fast. So you're getting a huge emotional perception adjustment now. So we're coming back down to these levels that we never thought we would get to in the first place. And now we've kind of taken off a lot of the really big, the bigger move, that kind of feels like. So we have expanded limits today. I wouldn't be surprised to see a heavy amount of follow through pressure. I mean, in the past, when we've seen plant closures, plant fires, these kind of things, when you take these buyers out of the market, when you've just seen that kind of headline hit the news, we've seen this liquidation last a couple days, so I wouldn't be surprised to see kind of this trend to continue. But we've been able to feed the bear. You've kind of got this element of fear in the market, especially with the administration kind of pushing their narrative of getting cattle and beef prices lower, and the real concern about the headline about any kind of progress with the U.S.-Mexican border. So once again, it just kind of feels like we're stuck here, and we're feeding the bear at every turn. I mean, you got some sales in Iowa at 208. That's down $8 from last week. So we're still seeing it. There's liquidation on the cash side as well. We see feeder auction prices 10 to 20 lower, on the weekly summary. And then yesterday they suspended LRP quotes because we were locked limit down. So just a lot of moving parts right now, a lot of fear. I mean, I think people that aren't hedged are going to be kind of scrambling here, and we are going to see an uptick in open interest and commitment, because right now the board is really, even though you got this big discount, you've kind of lost that edge on the insurance side if you waited till now to hedge. So it's just one of those things, like the perception changed. We're going to be looking for a bottom. I mean, but at this point, it's just mainly fear right now that's kind of driving us. Then on the hog side of things, big kills right now, massive. So we've seen the huge downturn in cash, in futures, in product prices. So I mean, carcass is finding a little bit of support. See a little bit of support in the futures market. So I think we're going to work our way through these big kills right now and just kind of focus maybe towards the next 3 or 4 months overall. And so I don't know. I feel like we're trying to carve out a bottom here in hogs in the interim, but we'll still need to see some cash price stability in the interim.
Yeah, so crazy. Just looking at it, look at a monthly chart. I mean, you still have to break $40 to get to the previous all-time high.
Yeah.
Just to put in perspective, like you look at a chart, like, oh, that just looks like a nice little correction.
Yeah, I mean,
just realize how big these moves are.
Well, it depends how far out you look, right? You look at a couple of years back, and it's pretty much a straight line going up, and then this little blip. Like I said, we're coming back to prices that nobody even thought we would get to in the first place. Before we got through $2 in live and $3 on feeders. Like, we're taking off a big portion of the move that like really accelerated higher really quickly. Right. I mean, I think this market is very emotionally charged right now. You can see it all over social media. You can see everybody panicking. I mean, like, it just seems like everybody's chicken littling the cattle market right now. But obviously we got a supply report, and it was relatively friendly here. It's just we're seeing a little bit of a correction in perception, I think, just especially because of the administration, and they kind of want, sometimes they get what they want. But realistically, like, the fundamentals will always prove out. You can only, in my opinion, if you got a really tight cattle supply right now, you still have to incentivize herd rebuilding. Like, we can interrupt the cycle from time to time as we've done in the past, but I mean, we are still really tight. If we run into tight numbers, somebody's still going to have to pay a higher price. It's just the way it's going to be. So, I mean, I think cooler heads will prevail out of this. It doesn't need to just go limit down every single day, but I mean, it feels like we're just, like I said, it just feels like we're in this kind of fear mode, as they call it in the cattle market. We're in give up mode, like the longs just finally throwing in the towel.
Real quick, what were those expanded limits this morning?
1075 for the live and 1375 for the feeders. Yeah, kind of a whopper.
Okay.
Yeah, it's going to be a wild ride, man, next couple of days.
Yeah, well, anybody that's got questions or needs anything, give us a call on that deal. Couple things to point out. We will have a full market tomorrow. So regular market hours there on Wednesday. No markets there on Thursday. Kyle likes your shirt there, Justin.
Oh, thank you. Thank you.
Fancy markets. I like that.
Yeah, they are fancy. We're closed on Thursdays, and then we'll have a hard reopen at 8:30 on Friday there. So appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with the AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.